So this is a question from David today about the Aussie Kiwi 4-hour chart. He says that it looks like there's a ghost valley, but he's not sure. So let's take a look. Here's the Aussie Kiwi 4-hour chart, and we have a touch down here on this level, and then we have another touch again. Now let's see what the lowest low is here on the first touch. The lowest low here is 2180. So did we spike below that and then close back above that low? Yes, we did. We went as low as 2173, so it did go 7 pips lower. So how is this trade managed? Also, remember, we can, if we want, we can throw up any sort of indicator on here, like an oscillator, and check and see that that it is indeed divergent, and it is here. You can see even though we have a lower low here on our stochastic, the value is 12.5, and on the higher low, the first low, the value was actually lower at 5.1. The only thing I would say about this one that's a little bit tricky is that it's interesting that it's printed this inside candle since it's touched. Doesn't mean it won't turn around and go up. That's a pretty good indication of a trend continuation. In other words, going down some more. So it doesn't. The candles don't actually say anything. Don't scream "buy me," but it is indeed a ghost peak, or sorry, ghost valley setup. So how would I manage this? Well, this is what I would do. Is first of all, I know that my low is at 73, so I'll go ahead and put my stop loss down at 40, right about here. That to me is going to give me enough cushion. And if the market ever closes below this candle right here, the low of this candle, which is 2180, if any of these candles close at below 2180, it's trade over. All right. Now, what about the target? The easiest target to see here is, well, you could go for these lows actually, which is the first place it's going to find resistance. But in essence, these candles have pretty much already tried to spike up there. And they have found resistance, obviously. But it was the end of the day, and we're just starting the agent session now. So I would actually go for these. So, and remember, we enter on the close of the ghost peak candle. We're not waiting for anything other than the close of the ghost valley candle. So that's about 47, 48 pips on that one, and the overall risk is about 40. The same. It's about a 1-to-1. The second target would actually be for about 95 pips up here at 2281. But I just wanted to send this because David did spot a pretty good one. It's not ideal, obviously, if we get any sort of kangaroo tail, long wicked candle here. It's even better. But it does have sort of all the characteristics. It touched, it moved away for a long time, and then came back down and touched again lower, which is, in theory, that is what we look for in a ghost valley. If you don't like using indicators, you will generally see that the divergence like we did on this one. And I'm sure actually we could put another one on here. Anything like here's the CCI, okay, and it also has divergence. No, sorry, it doesn't. This is the 8. Most people don't use the 8. Let me change it. Switch it up here. I'm not sure, but I think a lot of people use the 14 on this one. And then you've got the same sort of deal, don't you? I mean, it's the same exact looking as you had with the stochastic. So there you go. But if you wait for a lot of candles between touches, that's where you're going to get your divergence. That's where it'll pop up. And that's why I like, in things like whammies and moolahs, I like a lot of candles between the touches. You don't actually need to use the indicator. It's nice if you like to fall back on something, but obviously if you're going to trade this pure naked, the way to do it is get a really nice spike. Actually, the longer the tail, the better. This one went 7 pips lower, but it would have been better if it went 22 or 25 pips lower. And it's great if it comes back up and snaps up really nicely, almost like a kangaroo tail. It didn't quite do that here either. So I guess what I'm saying is that this trade, while valid, I would probably give it like a C plus. It's not ideal, But because we're opening up here in Asia very soon, I do expect it to make a move up. I think it will go up. I just don't know if it's gonna go all the way to our target. So it looks good, David. Glad that you found it. Probably, there's probably better ones out there. If I had to check, let's see here. See, here's one on the Canadian dollar. You've got your high is up here, right there, and look, we just spiked through it with a long tail. So right away, I can tell you, and this is Canadian dollar 4-hour. And if I put an indicator on here, let's go back to the CCI because we just had it up. I think I'm going to have divergence. Let's see. This is 202.29, and this is 176. So this peak is lower than this peak on the indicator, but you don't really need those. So this would be another valid ghost peak this time. Stop loss would go well above this high here, probably all the way up here at 103.07, which currently be about 45 pips away. And then as a target, again, in theory, I was supposed to get in on this close right here, which would have been really nice. And then we've got these to contend with, kind of like our other trade on the Aussie Kiwi. We had an immediate zone there, little minor zone, where we found a little bit of support here in the last candle that printed. But beyond that, this is the really nice area down here for about 46 pips, 47 pips down here. And this is around 102.20. So to me, this is a much nicer looking setup, simply because the wick here tells the story. And look, you can see there's lots of candles hanging out on this area. Boom, 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 and then bam. So to me, I would much rather go with this ghost peak than the ghost value, and I would rate this one like a B+. That looks really good. Okay, hopefully this is helpful for those of you who are watching ghost peaks and ghost valleys. If you like to trade a lot, it's a great system because you'll find them all the time. Ideal times to find them are at the opens and closes of the markets. So if your candle coincides with, say, the London Open or the New York Open, that's perfect. That's a great spot for that sort of reversal type move. Or the New York close is another time. Another one to look for is lunchtime. So lunchtime in London and lunchtime in New York, another nice. And the reason for that is that the traders go to lunch, and so things start to slow down and peel back. And so those are the times I would look. First would be lunch opening time. So open for London, open for New York, and then the third favorite open will be the New York or the Asian Open, which just go by Tokyo. Go to Tokyo at timeanddate.com and see, when it's 8:30, 9 o'clock Tokyo time. That's your opening time then. And then the second favorite would be lunchtime in New York and lunchtime in London. And then another time actually would be to look for the Singapore Open. If you're an Asian session trader, maybe we'll do a whole video on that. But the Singapore Open has become really interesting lately, simply because there's so many funds that start trading at 9 a.m. around 9 a.m. Singapore time. So that's another time to look for these. So hopefully that helps. I wish you happy trading, and we'll see you soon. Bye.